Well said. So the dollar yesterday slid after President Trump criticized the Federal Reserve, saying he's not thrilled by recent interest rate hikes, suggesting that they risked undermining the strengthening economy. What do you make of this rebuke by the president?
Well, I'd say a couple of things about that. The first thing is that you have to be careful about looking a gift horse in the mouth. U.S. interest rates are very low. We have an unemployment rate of 4%. We have an economy, as we were just talking about, that grew 4% in the second quarter and is growing above, it seems, its potential, with a very low interest rate. The Fed, so you have to be careful about calling out the Fed for raising interest rates too aggressively when they're really low in the kind of environment that we've got. The other thing I'd say is that the Fed hasn't changed its course at all. The Trump administration came along. They cut taxes. That has helped to spur economic growth. The Fed has not changed its course. They've been on this gradual path of interest rate increases. So, the president was complaining in this news clip about the Fed holding back what the Trump administration is trying to do, but they really haven't altered their path at all. So, it's a little hard to put that kind of argument into perspective.
Well, Adam, a lot of people are trying to make much about the president even talking about the Federal Reserve, because recent administrations, I think it started during Bill Clinton's administration, that the attitude was don't talk publicly about the Fed. But again, it's a throwaway comment. It's not like the president's got a call in Jay Powell on the bat phone.
Bingo. And the Fed will, and John can attest to this, they will preserve their independence. They'll bend over backwards to try and at least appear independent. So they're probably, John, they're probably not taking the president this morning. They're still sleeping sound, are they not?
They are sleeping soundly, but I actually don't think it's a throwaway comment because, there's this debate going on about whether the Fed does 2 more interest rate increases this year or 1. In other words, whether they have a meeting in December where they've got to decide if they want to do 1 more rate increases, or do they pause and wait another quarter to do one. It looked like kind of even odds on whether they pause. But if you're Jay Powell right now, what are you thinking about whether you're going to do that pause later in the year? Now, all of a sudden, if you do the pause, people might say, oh, well, maybe you're pausing because Trump is breathing down your neck. I think, Jay Powell wants and has to show his independence. It could come into play in that meeting where they have to decide if they keep going a little bit or whether they hold back. So, I think this, whether the Fed likes it or not, this does play into how they strategize. I don't think it plays into how far they go on rates, but I think it does play into how they strategize the very next move.
I'm just saying, let's not, again, I made a joke this morning on Twitter, but let's not go as far as comparing this to Richard Nixon putting pressure on Arthur Burns to keep the economy juiced up. And that
or Lyndon Johnson poking him in the chest and saying, don't do that. Yeah, I mean, we're not seeing that yet. But I do think that it kind of plays into the psychology of decision making.
Well, guess what? The longer term interest rates are not directly controlled by the Federal Reserve. That is the market, and they will move against you and fast, and there's nothing you can do about it. So, John, thank you so much. John Hilsenrath, we covered it all.